if you're planning for a family in future, then you should go for life insurance. And again, the same thing. I know I'm repeating this again and again, but yes, earlier the better. Earlier the better. With life insurance, as long as you are healthy and the younger you are, your premiums will be much, much, much lower. Hello friends, welcome back to my channel. I hope you all are doing well. Today I'm going to do a continuation of my previous episode where I talked about life insurance options that we have in India versus Canada. In this episode, as promised, I'm going to touch upon why you need life insurance, whether you should buy life insurance or not, and if you need to buy, how you can make a good choice, the right choice for you and for your family. So, first question, who needs a life insurance? I would say any person who is earning an income and who is supporting his or her family needs a life insurance. It's as simple as that. If you have an income, if you're single today, but you plan to get married, you plan to have a family, then today is the time you need to go for a life insurance, because the younger you are, the better your premiums. I had a client who went for life insurance for 3 of his grandchildren, the youngest being the age of 6. Now, I would say he made a very prudent financial decision by buying life insurance for an underage kid, because as he grows up, his needs are going to increase. But then when he figures out that he has a portion of his income saved just because his grandfather had the vision to actually think of him way before in hand, he is going to be set for life. If he wants, he can always increase his coverage later on in life, but he has the foundation set already, and he's got life insurance very early in life at very, very little premiums. Forget about your health, forget about your medical conditions. The baseline is simple. The more you age, the more your premiums. So get your life insurance as soon as possible. Why you should buy life insurance? I think I covered a bit about it in my last video. So reasonings are simple, right? If you want your family to not suffer, in the scenario that something unfortunate happens, then life insurance is your answer. And also, especially if you are in North American countries, in countries like Canada and US, where you have these estate taxes, then again, life insurance is a must, or I would say permanent insurance is a must to avoid the estate taxes, or for your family to be able to afford those death taxes. Now coming to how you can decide your coverage. Now this is something very personal, something which will change based on your personal situation. So you need to talk to an advisor or an insurance agent about this. The way you can decide your coverage, at least from a ballpark number, is by taking your current income and multiplying it by 10. Now, people have incomes which keep increasing. So remember that you can always get better coverages as you age, but those coverages come at a higher cost. So when you do it today, make sure you can get the best possible coverage for the age that you're in. Now also, as you age, you have more health conditions that come up, and with every health condition, there is added premium cost attached with it. So again, it comes back to the same thing, right? The earlier you do it, the better, and the healthy you are, it's better. Do we even need life insurance? Many of my friends say that they have coverage through their companies, right? Even I have a coverage through my company. But then the question is simple. When you have coverages through your company, the company covers 1x the base amount or 2x the base amount. It doesn't go more than that. So, worst scenario, if the need arises to get that coverage amount, imagine how long can your family or you survive with that 1x base amount or 2x base amount. I would say in my case, a maximum of 3 years. If they reduce their lifestyle, they can probably survive for that much. But then here I'm not even considering the estate taxes. And if most of that coverage goes into my estate taxes, then I think there will be barely anything left for my family to survive on the rest of the coverage that my company would give. So even if you have a minimum coverage given by your company, I would still recommend go talk to an advisor, do a needs analysis. There is a method that the advisors or agents use, which is called the DIME analysis, to come up to the coverage number for you. So go talk to an advisor and make sure you get the number which makes sense for your family. So this is how you decide your coverage amount, why you need coverage, and who should get a life insurance. Now let's come to different scenarios of what kind of insurance would be the right fit for you. Say you are a student, okay? You have just come to each of these countries, be it US or Canada, and you plan to settle in these two countries for the long term. In that scenario, the long term, you need to decide what the long term would be. Now, even if that long term is 10 years, 20 years, then don't even think further from this point. Get a term insurance right away, as soon as possible, even if you are a student, okay? But make sure your term insurance is renewable, convertible, because down the line, if you want to convert that into a permanent insurance, there should be an option available for you. And it should also be renewable. What I mean by renewable is at the end of the term, if you want to continue the same insurance for another 10 years or 20 years, you should have that option provided by the company. So in the scenario that you're young, you have not yet joined the workforce, you are just a student who is going on by minimum wages or doing some few jobs to pay your college fees, you wouldn't have a lot of income at your disposal, but you can always afford, say, $10 to $15 to get a minimum coverage, so that, down the line, if you want better coverage, you can go for it, but you at least have the foundation set up. Now, if you're a young family, or if you are a DINK couple, right? Dual income, no kids kind of a couple, then again, if you're planning for a family in future, then you should go for life insurance. And again, the same thing. I know I'm repeating this again and again, but yes, earlier the better. Earlier the better. With life insurance, as long as you are healthy and the younger you are, your premiums will be much, much, much lower. So do not keep pushing this one thing for tomorrow, because the more you push it, the more costly it is going to be for you. Now let's come to the third scenario. You have a kid and you are a young couple again, where both the husband and wife are working. Then again, both of them need to get the coverage, a proper coverage, and make sure that you also have a will in addition to the coverage, because in these countries, in North American countries, it's not like India, where the custody of the child can easily be given to the grandparents. Here, there is a trust, there is a custody battle that will happen if something happens to the parents for a kid. So you want to make sure that your kid is in good hands within your family. Then make sure you have a will as soon as possible if you have a child. So now coming to the other question that I get asked, which is, we have two incomes. We have the husband and wife, both of them earning. Then if something happens to one of the earning members, we still have someone else to fall back on. But think about it this way. Imagine the lifestyle of your family if your income is cut down to half. First thing. Second thing, when the income is cut down to half, did your family ever think about estate taxes? Did your family even plan to give a major chunk of their money to this tax man if something happened to you? The emotional side aside, right? There is a big emotional side when it comes to death, and the family always already goes through an emotional turmoil when something happens to the breadwinner. In addition to that, if they have to take care of these kind of financial troubles, you really wouldn't want your family to go through all that in a scenario which is already so disturbing for them. So, though both people are earning in a couple, it is still advisable to make sure you get the best coverage for each member, the husband as well as the wife. Now let's come to a little further, right? Let's see the case of a person whose kids are grown older, who are probably going to college, and the responsibilities are much lower at this point in time for the couple. Now, in this scenario, you need to rethink. By this time, you probably would have had a term insurance, which is almost coming to the end of life. Now what? Your insurance is going to die away. What next? You're not insured. We are going to die one day. So what about the assets that you have accumulated all your life? What about the money, the income, the wealth that you have gained and something that you want to pass on to your family? You wouldn't want half that money to go to the tax man, right? Now that is where permanent insurance is a better option for you. Your income would be better, your responsibilities would be lower, but then you have more breathing room in your monthly budget, and that is when you can think of a permanent insurance. And if you already have a term insurance which is convertible, that's the best option, right? Just go for it right now, right away, for a convertible permanent insurance. Now in permanent insurance, you can decide whether you want to go for a universal life or a whole life. That all depends on your budget, that all depends on your long-term outlook when it comes to how you look at insurance. You can also use insurance as a significant wealth building option. Just like I mentioned in the last video, the growth is tax-free in most of these investment cum insurance options. So that is one very good thing you can think of if you're in that stage of life where you have lesser responsibilities but more disposable income. So now the last option, of course, if you are out of the workforce, if you are retired, now in that case, getting an insurance is going to be really difficult because most of us in the current lifestyle that we live will end up having a lot of health issues by the time we hit 50, 55. I don't know even if I'll have no health issues by 50 or 55, right? Given the work culture, given the food that we eat, I'm sure something or the other is going to come up. So by then your premiums are going to be crazy high, and after 60 your regular income is going to stop. So you would need all possible money to fend for your retirement. So it's almost, I wouldn't say it's impossible, but it is very unthinkable to buy an insurance after the age of 60. And by then, if you do not have an insurance, then there would be a different type of retirement planning that would be required to make sure that you wouldn't pay a lot of taxes in your estate. So this is what I wanted to cover today. Basically, who, why, how much, and different scenarios on how you can consider insurance. I hope you found this content useful. And if you want to talk further about any of this, I am available for a one-on-one conversation. You could always book an appointment with me, and my details are there in the website below. Thank you very much for watching this content, and I hope to see you all in the next video.